Hey guys, welcome to the channel. I hope you all are doing well. In this Forex series, I will be covering everything from basics to advanced, which will help you become a profitable trader in your Forex journey. In this video, I will be covering 5 different types of orders. So, this will be either a refreshment video for those who already know this or an intro video who are beginner in Forex. So, let's get into the charts. So there are 5 different types of orders which are buy stop, sell stop, buy limit and sell limit, which you can place on your MT4 or MT5 terminal or your Forex broker terminal. So the first one is market order, which is very easy. You basically place a buy or sell order at current market price and it get executed at the same exact price. So let's talk about buy stop and sell stop order. These are mainly used for breakout strategy. So let's assume the market is trading in a range and you anticipate that if the price breaks a certain resistance level it will continue moving upwards. So in buy stop order you basically place a future order at a higher price than your current market price and which get executed once the price crosses that level. So the sell stop order is opposite to buy stop order. Here also the market is in a sideways range and you are basically anticipating that when the price breaks a particular support level it will continue moving on the lower side. So here you are creating a future order below the current market price which will get executed once the price crosses that level. So the other two types of order are completely different. Here you anticipate that the market has created a bottom or a top. So let's say the price is creating this kind of structure in the market. So you're anticipating that it has created a bottom already, and once the price reaches this level, it will bounce back from here. So you're basically putting a future market order which is below the current market price from where you feel the price will move upwards. So it's kind of a double bottom structure. Okay. So the sell limit is exactly opposite to the buy limit order. In buy limit, we saw that the price has created a double bottom structure, right? So in sell limit, if the price created this kind of structure, so and you're anticipating that once the price reaches this level again, it will fall from here. So you're basically creating a sell limit order higher than the current market price in anticipation that the price will continue falling downwards. So we learned 5 different types of orders today. First is market order, current market price. Second is buy stop order for long trades above current market price. Third is sell stop order below current market price for short trades. Fourth is buy limit, which is below current market price for long orders. Sell limit is above current market price for short orders. So that was it for the video. I hope you liked the video. Please show some support by subscribing to the channel and liking this video. See you in the next one. Take care. Thank you.